going back to sort of something John was also saying about, well, okay, well, why then is this driving this behavior? It's not that, like, if we're not in the world where we've definitively said, hey, we have, millions of consumers who say, I want a BOGO on this specific product, right? And that's what's causing it. Why are we getting all these vendor discounts that then get passed through? And a lot of it is driven by the supply, right? A lot of it is driven by retail oversupply, coming from vendor oversupply, coming from all of this thing in terms of like we're trying to find a way to match the supply in the market to the consumers, and it's very mismatched right now. So the average retailer has about 51 days in inventory in stock right now, right? That is about $132,000 in wholesale value per store that is overstocked, that won't sell within 30 days. If people are used to net 14, net 30 terms, but objectively you have 51 days of inventory in dollar terms, then you're not going to be able to pay everyone back within 14 days, right? And you must rotate through and you must lever those vendors who are contributing to that, right? To bring it down. I think there was a question that just came in, like how many days of inventory is that sweet spot? I would say it's driven by the net terms. Outside of cannabis, a lot of people try to manage to that net 14. If you are running on net 30, great. But if you are dealing with the fact that your total supply is multiples of the net terms that you need to pay back, right, on that wholesaler, then that is going to cause a rotating debt problem. It just is going to, which then the wholesaler is going to get back as delayed payment, right? Or discount on my next inventory to cover like that supply that didn't sell,
Yeah.
right? At a
We
product,
have no issues with AR in this industry at all right now, right? So
yeah, yeah, yeah,
like definitely not a I mean, we can laugh about it, but it's like, laugh while you're also like feel like you're dying by a million cuts, right? And so it's one of those where it ties right back into AR, right? It's like you're giving terms as a brand, right? You're, 14 or probably 30, right? Some are even going more than that, right? And you're expecting, prompt payment on those terms so you can continue operating, and somehow you've financially understood that you can do that, right? But when those start to get pushed out, right? And then it dramatically impacts the business, right? The service, the investment in your company, right? The bottom line. And like you said, ultimately, then you're either just getting paid slower, right? Or you're having to come back on future things and incentivize and lower your margin down to help that product move later so they're not sitting on it, right? And so either way, it's a negative impact on the brand if that retailer, it might be great to get that initial order, right? Oh, I got that big order. But then if that product's not moving, right, like we've talked about appropriately, right, at the right scale, at the right sell through, then it's going to impact you work. The negative impacts will come back to you in probably two ways, right? And it's going to hurt your business in the long run. So it's just like that's so important, right? That concept around it. But
yeah. And to that point on demand signals, right? And to the point on, but going back from the very beginning, the wholesaler is the one setting the price in terms of setting that baseline that the retailer is looking to make margin maximization off of. The wholesaler is setting that price based on a perception of demand that they get based on how much volume they're moving through. That comes back up from the retail cross reference with aggregated third party, right? When we're dealing with a retailer who's then is basically FIFOing, right? First in, first outing, almost kind of like paying back on the wholesale side, getting more, something's running out. But we know that on average, regardless, they have almost 2 months worth of inventory. They're giving an improper demand signal back up. That not matching demand signal then needs to be adjusted rapidly and aggressively through expiring inventory discounts, sample inventory movements. Hey, we can't stock this anymore, all of a sudden, types of things, switching out for better margin products in that way, better terms, maximizing on what terms you can get, which then causes some of that supply volatility, which then is ultimately translating down to the consumer as discounts, And that
Mhm.
is then what drives your marketing. Your marketing at the retail level is almost entirely driven by all of these compounding effects of going back upstream. And that's where we talk about the discount doom loop. That's where it's coming from.
Yeah, those brands, right? You have two demand signals, right? That you have to probably be aware of today are false that you're operating on. You're operating. Number one is if you're selling out or you're quickly selling out, you got to think, well, potentially my retailers are overstocking my products, right? And so while I think I have great demand and I'm selling out and I want to produce more to expand, well, wait, maybe if my retailers are actually overstocking and they adjusted correctly to that 30 or 14 days of inventory, right? Now am I sitting on excess product, right? And then also, oh, the market's good right now. I'm selling it for a lot. Seems like now I'm scaling up and you're scaling up under a false narrative. Oh yeah, this will just remain like this, right? And then the other one is, oh, my current demand's actually what the demand's going to be if it's accurate. And then you have two false signals that come to you and you've produced way more than you need to and you're right back like you said in this doom loop of discounting or ultimately just having to lower your price. You know, you're just gonna now you've gone from top to value because you got to move the inventory. It's got to be priced at, and then you're sitting on a lower shelf, right? You're sitting on that, and you're
Yeah,
not committing that premium. You're not uh, going after that target consumer that you set out to go after. And you just get into this kind of, like you said, this loop, right? This doom loop of just like having to react and react and react. And if you're not thinking about it of all those different signals, right? And then really trying to also think about like how, okay, this is the signal, but is it right? You know, is it accurate? And if you can really understand that, it's going to allow you, I think, to start to understand production, making
yeah,
sure you're producing to demand, right? And then you're selling the right way to the retailer. You're incentivizing them the right way. You have a great a great relationship that is, yeah, I think that adds a lot of value rather than trying to figure out how do I take away from one or the other, right? Which is not a is never a fruitful relationship partnership anyway, is trying to figure out how to get one on the other, right? It's this I want you to be successful and I want to be successful too. And we're going to be mutually we're going to grow this thing together, this industry together, right?
exactly. Exactly. And I totally agree with in terms of the loop causing that false signal back down to the retailer. Retailer says, I'm looking to maximize margin. Brand comes back and says, hey, I can give you better margin. I can give you discount, get sample units if you order more, right? And then you say, that's awesome. I'm going to order more. But at the same time, the demand's not there, right? At that consumer level. And to your point on building, well, that's why building those solid relationships so that you're consistent, the retailer has a great relationship with the brand, consistently ordering at a consistent margin that is manageable, and you're not pushing that above what level demand that realistically that retail shop can handle to actually sell out of all the product at a healthy margin in a short period of time, right? So that the cash is flowing throughout the industry.